Hey, this is Crystal Miller with another Tip Tuesday for you. Today we're going to talk about reverse mortgages and some of the myths that come along with that. There's been a ton of changes to this loan product in the last 6 months to a year even. So if you've got information that's not relatively new, it's quite likely it's outdated. So we're going to start with the reverse mortgage being sold to the bank. And who owns the home if you do a reverse mortgage? The myth is that the bank owns the property anytime you do this, and that is not true. The owner of the property is still the owner of the property. So the bank is going to put a lien against the home, just like they would if you refinanced or had a mortgage, but they're not going to own the home. You continue to hold title to the property even though you have a reverse mortgage in place. Another myth is that the homeowners can be forced out of the home. That's not true because the borrower usually receives money from a reverse mortgage instead of making payments to a lender. So a homeowner can never be evicted or foreclosed on for a non-payment because they're not making payments on this product. So however, it is the homeowner's responsibility to stay current on their taxes and insurance. That is something that can have negative effects on property rights if you get way far behind on taxes or you're not insuring the property correctly. Someone can outlive a reverse mortgage. That's also not true because once the homeowner is no longer occupying the property for 12 months or more, the house can be sold and it can be sold at fair market value. So even if you end up owing more than the home is worth, they can't come after you for the difference between the value and what's owed. And they also cannot come after your heirs for that difference in money as well. Social Security being affected is also a huge myth. The myth is that it is affected and that it could negatively impact your eligibility for certain programs. And that is not true. The money that you receive from a reverse mortgage is non-taxable income. And so it cannot affect your Social Security and it cannot affect your Medicare benefits and eligibilities. So that's another myth that is completely not true. Homeowner pays taxes on reverse mortgage funds. It's not true income. It's just you're utilizing an asset. You're tapping into that equity in your home. And so that is not quote unquote income. So it's non-taxable when it comes to income tax. So that's another huge misconception that's been out there for a long time. One of the last things I wanted to clear up was the expenses that come with a reverse mortgage. I hear lots of times people say, well, these things are really pricey to get done. And they do have loan fees, just like every other loan out there has. And they also have mortgage insurance, just like your traditional FHA mortgages have mortgage insurance. So those things are in place and there are fees, but they are not having to be paid out of pocket. You know, huge majority of the time, all of those fees can be financed in with the mortgage. So you don't have to write a check or have any out-of-pocket expense in order to do the actual process of a reverse mortgage. So I feel like that was some really fast hot spots, but I just wanted to really hit on those things that I feel like I hear a lot and they're just not accurate, what people have as far as basic information in a reverse mortgage. So hopefully this is helpful. If you have any questions or if you know of anybody that could even possibly benefit from a reverse mortgage, please don't hesitate to have them reach out and I'd be happy to contact them as well and see if there's some way that we can help them or see if this is a good option for them. Our website is millermortgagepro.com and you can always find more useful information there as well. Have a great day.